Welcome back to Broader Financial Future, to all my future millionaires and billionaires out there. Hopefully everyone's having an amazing day so far. Welcome back to your BFF when it comes to finance. And today's video is all about Qualcomm, ticker QCOM. You don't want to miss today's video, but before we get started, make sure you smash the subscribe button if you haven't done so already. Hit that like 5 times, and don't forget to share this video. So stay tuned. And just a disclaimer, I'm not a financial advisor. This video is strictly for entertainment purposes only, and any investment may involve risks, so it's important you do your own homework or seek professional advice. Now let's jump into today's video. Now Qualcomm is a company I've been meaning to buy for a long time now. It was first on my radar at about $70, which I wish I would have bought then, but for some reason I think I bought another company. I can't remember which one, but this one always stuck out to me as a company I wanted to get into, but the price just kept on climbing. So what is Qualcomm, ticker QCOM? So what they do is engage in the development, commercialization of technologies and products that are used in mobile devices and other wireless products, including network equipment, broadband gateway equipment, and consumer electronic devices and other connected devices worldwide. One of the big things too is 5G. So they're also in the 5G space as well. They are what's considered a semiconductors and semiconductor equipment sector. So that's the sector that this company engages in. So if you're interested in 5G and you think 5G is the future, this is one of those companies that you want to keep on your radar, especially when it comes to mobile devices. When I look at the current price at $131 and I compare that to the 200-day moving average of $138, it's currently on sale from its 200-day moving average. And when I look at the 50-day moving average, it's also on sale because the 50-day moving average is $140.96. So it's trading well below its 250-day moving average. Now, this company has performed 112% gains for its 52-week performance. So it's doing really good if you look at its 52-week history. Now let's look at the 52-week high and low. Now the high was at a whopping $167, almost touching $168, and the low was $59.04. So it's still way above its low, but definitely trading below its previous high. So it's definitely trading at a discount when I look at those numbers. Now, this company has a large market cap of $147 billion. Their PE for the trailing 12 months is 22.18. This year estimate is 17.8. So their PE is going to go down this year. Now, their dividend yield is lower than I typically like to get into. Typically like to get into a company that has a 3% or higher when it comes to a dividend yield, typically 3 to 5%. But this company, I think, is well worth it, especially when it comes to the potential with the growth of the price of the stock. Now, they pay a dividend payout ratio, they pay a dividend payout of 65 cents a quarter. Now, they raised their dividend for 17 consecutive years. That's more raises than most people get on a yearly basis. So they're doing a good thing when it comes to their dividend increases. Now get this, their dividend rate for the past 5 years on average is a whopping 6.25%. And their dividend payout ratio is 44.44%, which is enough to continue to raise the dividend for quite some time if all things hold. Now, their free cash flow for the trailing 12 months is $6.3 billion. That's right, $1 billion with a B. And when I look at their EPS growth, earnings per share for the trailing 12 months versus the prior 12 months is 66.19%. Also, when I look at the revenue growth, their trailing 12 months versus its prior 12 months is 25.8%. Now, the operating margin, typically like 28% and above. This one's at 23.82%, which is fine. I'm okay with that when it comes to this company. The gross profit margin for the trailing 12 months is 62.94%. So those are some of the hard numbers there. Now let's look at some of their institutional holders. You're going to see a company like Vanguard Group, which we typically see in a lot of these companies. BlackRock, FMR, LLC, State Street Corporation, Price, Invesco, Bank of America, just to name a few. So those are some of the top holders when it comes to the institutions. Now, if you have some of these mutual funds or index funds, you'll have a piece of this company as well. If you have like Vanguard 500 Index Fund, Fidelity Contra Fund, Vanguard Total Stock Market Index Fund, Fidelity 500 Index Fund. So it is in a couple of index funds as well. So those are some of the top institutional holders and also some of the top mutual fund holders as well when it comes to this particular company. Now, one thing I like about this company is it's in the 5G space, and I feel like there's a lot of room and growth for the future when it comes to 5G, especially when everybody's working, well, not everybody, but a good amount of people are working from home. A good amount of people are using their phones every day for multiple tasks, and speed is going to be very important, especially when it comes to business, especially when it comes to communication. If you're doing a Zoom call on your phone, you want to be able to have a clear reception and a clear image or a clear resolution. So I think this is going to definitely help out how people communicate with their wireless devices. Now let's get into some news about this company. They recently the U.S. antitrust officials are unlikely to file as a Supreme Court appeal in Qualcomm case. So that's the positive for them. So it looks like the antitrust lawsuit is going to disappear. They also recently acquired Nuvia, which is going to help enhance with their Windows, Android, and Chrome ecosystem. So they are definitely going to help their ecosystem when it comes to their products. Now, some of the negative things I don't like about them is their debt. Also, right now, there seems to be a chip supply going on in the world, so it's definitely having an effect on a lot of chip makers, from cell phones, cars, you name it. And biggest news is they might lose their Apple account, which account for about 20% of the company's revenue. So those are some of the things to look out for when it comes to this company. Even if they lose their Apple account, they still have enough accounts to kind of keep them going. But Apple is a big one. So that's one of the reasons why this company is probably dropping in price, even though they had a good year last year. That's some things to be aware of. But when you look at their Truvis evaluation, they have it at $156. Their equity summary score is neutral. And when you look at Yahoo Finance, their 1-year target is $172. So when I look at all those numbers, it's currently, for me personally, is trading at a fair evaluation. So around $131, $130, below $132.33. I like this company, and this is a company I'm looking into buying. Actually, I started to buy and just open up a small position in this company because this is a company I feel has a lot of potential, especially in their near term and long term potential. So this is going to be more so a long term hold when it comes to my portfolio. Now, let me know, is this a company you plan on buying? Do you already own Qcom? What do you think about 5G? You know, I had videos talking about Verizon Wireless, AT&T. Everybody's moving heavily in that direction. Let me know, what are some of your favorite semiconductor companies? And if you're interested in investing, check out my links below. And thank you for watching. Don't forget to subscribe, like, and comment. It really helps the channel. And if you just want to say hi, just say hi in the comment section. And it's a pleasure like always. Until next time, peace.